Yo, rah, watch me detonate. The ego you inflate. You overestimate your fate while your P&L disintegrates. I incinerate your data slate, obliterate your little traits. Your big dog trades a puppy weight, your confidence evaporates. Yo, brag like you orchestrating global macro symphonies, but every time you click it's like a toddler swatting at a swarm of killer bees. Your patterns look like autopsies, slashed up, hemorrhaging. Your chart scream, call CSI, every candle's a crime scene again. Your chest thump like a barbarian, but your bargain been embarrassing. Your account taps out like it's stuttering, lung collapsing and wheezing. You ain't a beast, just background static, a glitch. A fleet trying to roll while getting flicked straight into a ditch. Oh my God, an execution with venom. Fake ass trader, loud bark, no bite. Every margin call hits harder than your insights. You perform like a prophet, but trade like a curse. Your IQ and your balance sheet racing, and you'll see which one hits it worse. You're the new Wall Street clone for comedic relief. Your entry is their exit and their guaranteed thief. Talking trend, you can't even spell trajectory. Your whole identity a forgery, built off Reddit telepathy. You plagiarize conviction like a broke magician, trying to pull a rabbit out your ass. Only thing you pull is repetition. You holler discipline, nah, only discipline you got is religiously showing up to watch your equity ride. You treat opium like oxygen, stupidity like scripture. Every trade you enter paints another obituary picture. Your stops hitting faster than microwave popcorn. Santa slid through early just to say, damn, this clown was born torn. Call it volatility, nah, call it was factual. Daily ass beating so brutal, they borderline contractual.
Cold precision.
Ain't unlucky, ain't early, ain't misunderstood. You're just bad, my boy, tragically, fundamentally, permanently no good. You're these fiction, your entries, terrified reaction. Your long-term plan, one long-term chain of denial-based distraction. If losses were Olympic sports, you'd sweep every heat. Gold, silver, bronze, podium looking like your personal retreat. King of your own delusion, but you trade like your thumbs back. Under heavy contusion, if clownery paid dividends, you'd be billionaire class, but it doesn't. So salute yourself for repeatedly punting your own ass.
Oh, brother, oh, brother, oh, brother. Hello, and welcome back to another episode of the Matt Kohrs Show, where you're Matt Kohrs and I'm the show. It is a beautiful Friday, December the 12th, a.k.a. Payday Friday, TGIF, as we commonly do, pinned to the top of chat. In the description of the video, you will be able to find a link to the free giveaway. We're giving away 5 FFN accounts, 5 Vanquish accounts, and $150 of cold hard cash. It is free for all of you guys to join. All you have to do is like, retweet, and follow. Easy peasy lemon squeezies. It's just basically the Twitter page. Actually, I could quickly show you what in the world's going on there. Right here. Oop, hang on. We lost our bear. Happy Payday Friday. I'll be giving away 10 prop accounts and $150 of cold hard cash. All you have to do is like, retweet, and follow. 5 FFN accounts will be given away. And on top of that, they're doing 50% off, buy one, get one, and no activation fee. So basically, you could get 2 accounts for $75. And then on Vanquish, 50% off. And you'll also be getting a free reset and also no activation fee. FFN is great for sim-to-funded trading of futures. And then Vanquish is great for sim-to-funded of options trading. So if you're a futures trader, check out FFN. If you're an option trader, check out Vanquish. If you trade both, check out both. And if you're more of just a really, really fast marble racer, well, best of luck getting into the raffle, because of course we will be doing that today. Speaking of today, feel free to yell at me because I've already kind of been breaking my rules. Let me switch this up so you can see right here. I've been doing a little bit of pre-market trading. I've already locked in $200 on the quote-unquote big accounts, $100 on the quote-unquote small accounts. And as you can see, I also have a rider with the stop already in the money. I just put on a random reach goal. If it ends up ripping to 50, great. If it ends up knocking me out, that'll be $300 secured in the worst case scenario. So I was thinking about getting out at 30 because every account was up roughly 1,000, and that seems like it would have been a really easy way to conclude the week of basically already being done with my trades today before the market even opens. And in hindsight, I probably should have done that because it would have been way easier for me to do the giveaway. I would have been securing the money that I already have to do to buy those accounts, to buy those other accounts, and to do the $150 of cold hard cash, because I would have been able to lock in like a cool 20K before the market even opens. But on the flip side, I am kind of already guaranteeing myself some money. This is already realized. And in the event that it does pop, well, that's a pretty sick return in itself. So I don't know. My stop's in break even. I just want to be clear. I'm not being so incredibly degenerate that I'm somehow taking in risk. Money was locked in. You can see I went long 2 contracts, locked in one there. So bought and bought. Those are the blues. I sold one right there, moved my stop into the money. And I like that I'm being protected by 600. And I'm just arbitrarily kind of looking at 650. There might be a better target level, I suppose, out of the gate. But maybe we should worry about that a little bit closer to market open. So I just want to let you know, I'm already in a position. I'm kind of already doing some stuff, but hey, someone's got to make that money for the Payday Friday. So if you're just joining right now, get into the Payday Friday. It is free for everyone. All you have to do is like, retweet, follow. Those 3 simple steps: like, retweet, and follow. We'll do it roughly around 10:30 today. So with that in mind, I should probably do my job and get you guys prepped up for the market. Dow set to extend record as rotation out of tech continues. So kind of an interesting setup. Going into today, we are knocking on the door of a new all-time high. The S&P 500, which is the overall market, is real. It's only 20 points away from the all-time high. We are 0.26%, as in there's a very real chance we are talking about a new all-time high today. So whether you're trading SPX or SPY, whatever it is, you should probably set an alert on SPX getting into a new all-time high, because that's the real index, while SPY is the ETF created to track the index. So SPY percentage-wise is actually closer to the new all-time high, but what larger players like the big institution, hedge funds, insurance funds are going to be caring about is 6920.34. So like I said, you might want to set an alert there. Also, what's potentially in play today is the upside gap fill on NDX. Now, it's a little bit weird right now because Avago didn't do it as well as people wanted it to. If you looked at the post-market action, we actually had a big pump in NQ, a large pump in NQ. And this was basically right when we're getting those Avago numbers. So at that moment, basically right before the Globex session closed, everyone was feeling pretty freaking good about the fact of getting this upside gap fill and potentially even seeing a new all-time high today on the NASDAQ 100. But as you can see, when the Globex session reopened, remember it takes off from 5 to 6 p.m. Eastern, people started to digest those Avago numbers. Broadcom, they had earnings last night, and they weren't so happy. And we were flat. And then you could see around 4 a.m. this morning, it got a little bit worse. And then this is roughly where your boy decided to get in around 8:30, around 600. And I was attempting to play this reversal. And like I said, 50-50 shot. It ended up going my way this time, but more so it was important of the risk management. So I just wanted to give you some larger context, and I guess since we're here, Bitcoin is still slowly but surely grinding up in an overall downtrend ever since the all-time high. So I guess here, we might as well just talk about everything. Small cap sector hitting an all-time high on Wednesday, hitting another all-time high yesterday, and already this morning gearing up for another all-time high. As I've been alluding to, when it comes to this world of monetary policy and rate cuts and the Fed fund rate coming lower and capital itself becoming cheaper because loan rates go down, who normally really benefits are small cap plays because they're in need of capital. So obviously from a business perspective, it's easier for them to do what they need to as a business when it's easier to get capital, especially when sometimes as a smaller business, when credit conditions get tight, they're the ones who don't get the loans. So as they become a little bit more loose, well, surprise, the Russell itself, ever since it kind of became confirmed that we're getting a 25 bips rate cut, you have the small cap sector ripping 12.5%. If you ended up capturing this, and if you're still riding it, congrats to you. This was probably one of the best trades of the year, because as soon as John Williams of the New York Fed president, he started talking on the Friday morning, November the 21st. It was around 7:30 in the morning. It was 2 hours before the market opened. And he pretty much made it clear that we're getting a 25 bips rate cut. And that's exactly when we saw the Kalshi market spike for the 25 bips rate cut. The poly market also spiked. If that was your signal, risking this recent low, you got to ride this runaway rocket ship like no other. So congrats to you. And even in more of a smaller time frame of what's been going over the past couple of days, I mean, hell, even if we look at like just the 30-minute chart, it's looking incredibly strong. So small cap looking really good, the strongest right now. And then you have Bitcoin on a relative basis to the rest of these looking the weakest. And then the S&P 500 and the NASDAQ are kind of in the middle of those. But overall, I would actually very much argue that the bulls are in control. The bulls are very, very much in control. So I know they're citing the Dow. The only people who pay attention to the Dow are grandparents. I don't know why they keep trying to cite this. Like the Dow at one point in time was the key thing, and now whatever. Very quickly, because I'm going to spend a lot of the time this morning talking about individual equities. Nothing is scheduled for today, just so you know. So next week we have more information coming about. But as of today, Friday, December the 12th, it's just not on the list. At 10 a.m., let me check one thing. There might be some consumer stuff coming out at 10 right here, wholesale inventories. And then obviously we also have Chicago Fed President Austin Goolsbee speaking. So yeah, you might care a little bit about this. This particular report is by no means the end all be all, but there might be a little bit of jostling for position at 10 a.m. today. But overall, in terms of major macroeconomic events, we're in that little calm. Like we had some earlier this week, we're going to have some next week, but today going into the weekend, going into OPEX of next week, there's nothing like major scheduled. All right, bringing it back to the major news of this day specifically, AI-led slide extends into third day as Oracle and Nvidia fall in pre-market trading. So here is what happened. Avago, let's go to the 30 minutes so you can see it. At first, the initial numbers of earnings were very good. Avago went from 407 all the way up to 424. Then they started to chit chat, and all of a sudden the market did not like what it had to hear, and it dropped from 420 at one point as low as 378, which was a pretty incredible drop of 9.7%. That is a large drop, brother. A very large drop. What do we have going on over here? Potential little breakdown. Oh, do I want to leave it at 90 or do I want to move it up to 99 or 90, 98? I am protected by 600. Sorry, I'm managing this position in real time with all of you. I have a long position on NQ. I was trying to catch this trend reversal, but I'm wondering if the trend is about to reverse back into my face, which would be unfortunate. To be very, very clear, I'm already protected. I already have my stop in the money. The question is, how much money am I getting? 600, I am protected by that. But what if it, there is that argument. It goes to 99, 98, hits me, comes back out. But what if it hits 9 and comes? I'm going to give it a second. Like I said, at a certain point, it's in the hands of the market gods. At a certain point, it's just variance. Like I said, I'm already protecting myself. And the longer I can hold on to this, the better chance I have to surviving to market open. And at that point, it's like a 50-50 coin flip of, are the market on open orders bullish and we pop and I dramatically get my profit and it keeps going, or they could be selling. And if it does sell off pretty hard, well, then I'm at least protected at 90. So I feel like I'm going to take the shot today, but I have to survive another 16 minutes. Do I think this is going to hit within 16 minutes? I've already locked in a profit and my stop is already in the money. So worst case scenario is I'm making $300. So worst case scenario is still green on the day. Oh, is it reevaluating here? How much is this reevaluating? The buyers are right where my stop is. See, we ran into this wall at 36 and at 40, and VWAP is up here at 31. Maybe it's a lucky Friday. We're gonna give it a little time and see how it plays out. Anyway, back to what I was talking about. Avago, initially their numbers were good, and then they had a little bit more commentary, which I'll be getting into, and it got hit. And then obviously this is the impact that you're seeing overnight on the NASDAQ when it opened, kind of coming off of this. But overall, I would argue it's range bound. So who's really winning on the Nvidia trade in the short term is basically premium sellers. If you've been selling calls, congrats, you're winning. If you're selling puts, congrats, you're winning, because overall this thing is just not really moving. Oh, shoot. Your boy's about to get clocked. Maybe if there's a quick recovery of 600, I might be fine, but it looks like it's hunting me. It looks like it's hunting my position, which, hey, I suppose that's just an aspect of trading, but that's a bit of a bummer. Hey, that's a bit of a bummer. I'm going to give it a shot here, and maybe it can quickly recapture. What I don't like is where my stop is. It was at 90, and now they moved it down. The sitting buy orders are at 80, sell orders at 600, and sell orders at 610. For me to get lucky, it would have to take this chunk of people out at 600 and then above 610, and then I have the shot of fighting up here at 36 and 40. But at this point, it's quickly becoming a pipe dream because 600 is proving to be resistance. I was hoping the resistance would turn into support, and maybe it will, but if it takes out this level, there's a very good chance it's coming for me. So I'm going to leave the order up. Like I said, my stop is within the money, so I'm making money on this. It's just a question of how much money. So you get the general gist that right now AI is a little bit under pressure, and a lot of this is being spurred by recent earnings. Oracle reported after the market closed on Wednesday. Broadcom, aka Avago, AVGO, reported last night. But as you could see, there were some others as well. Costco tops Wall Street sales and revenue expectations. Costco right here, currently down 0.22. So not really much of a reaction. It's showing a little bit of green. You can see at first it was a bit wild, went all the way up, went all the way down. Right now, slightly red, but I have this in my long-term account. Haven't been the biggest fan of it lately, but I got into it rather early. So it's slowly grinding, but Costco, I saw some of you talking about it. So I just figured I'd let you know what's going on. But overall, recently, lower highs, lower lows. Maybe it could double, triple bottom here. It does seem as if there's some appetite to buy at 880, bounce, 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 bounce. So maybe it could pull it out again, the bounce off of 880, but obviously your guess is as good as mine. Lululemon jumps in pre-market after CEO Calvin McDonald announces departure. And on top of that, they had earnings, which obviously the market very much liked. So I just got filled. Let me kill this order. So I got filled, locked in 300 on the big accounts and 150 on the smaller accounts. So with that, let me kill all these open orders. That's a bummer. Cancel all orders. Remove. All right. Where are we? 500. Okay, cool. That's a bummer. I was basically using this trend reversal as my risk, and it just wicked me out. And knowing my luck, this is going to be the bottom right here, and I can almost pretty much now guarantee that at market open, it's just going to rocket because, of course, it has to knock me out of my position. So I feel like I did a good job. I tried to catch this trend reversal in here, was able to lock in one pretty close, and then I locked in one, put the other one into green, and set a runner, and the runner just didn't run. Of course, in hindsight, just talking about trader psychology, of course you wish you got out at the perfect high, but you never knew the high. For all I knew, this thing could have just kept ripping and ripping and ripping. So I already secured some money, moved my stop to break even, and I gave it a chance. And on this particular one, it just didn't work, but whatever. Green is green. Obviously, you might have to handle it a little bit differently depending on where your buff. I already told you, dude. I told you. Did I not tell you that it's going to knock me out just for it to bounce right there? Dude. There's three things that are guaranteed in this world: death, taxes, and your boy getting stopped out at the worst fucking level. If I put my stop to break even, I still would have been fine, and it's already back above 600, but I wanted to secure some green for my efforts, putting my accounts up to 300. Those are the three things that are guaranteed in this world. Absolutely guaranteed. Death, taxes, and your boy getting stopped out right before it goes in my level. Like that's how it worked. Anyway, back to Lululemon having good earnings and the CEO stepping down, up 10% in pre-market trading. But obviously the belle of the ball is Broadcom. Broadcom shares slide after investors seek bigger AI payoff. Broadcom beats on earnings and revenue, says AI chips sales will double in the current quarter. So seemingly very good. And this is one of those weird situations where we've all seen it before, but I think it's important for me to highlight it. You do commonly have companies that beat on earnings, quote unquote, beat top and bottom lines, beat on EPS, beat on revenue, and can go down. Remember, there's the other situation where sometimes you have companies miss on earnings, and then yet they could go up. So just understand, as an active trader, beating on earnings does not mean the stock has to go up. There's no pre-written rule. They're missing on earnings doesn't mean the stock has to go down. Yes, there's somewhat of a correlation, but the bigger correlation we're seeing recently is more forward-looking guidance. If the guidance is good, there's a better correlation of it going up. And if the forward-looking guidance is bad, there's a better correlation of it going down. So right now, even though Broadcom beat, Wall Street clearly had an appetite and a concept of it doing better. And clearly that's why we're getting hit. Now, I don't think this is like somehow the end of Broadcom. I don't think it's like just we're going to forget about it. If anything, we just hit an all-time high. So I see that it's kind of taking a breather back into the exponential moving average cloud. It's probably around its 10 or 15 EMA right now, literally just at an all-time high. So I get that if you're watching it, it seems like a dramatic sell-off. But in reality, as of this moment, I would still classify it as a healthy pullback. One interesting thing we did find out, for the longest time, there was a multi-billion-dollar company customer that no one just knew who it was. Broadcom reveals its mystery $10 billion customer is Anthropic. So that's pretty interesting. So that came out yesterday. Broadcom said in a September call that it had signed a customer that had placed a $10 billion order for custom chips. Yesterday, the CEO revealed that the mystery customer was Anthropic. So that's just another obvious big AI play. And they're looking, I believe, to go public next year. And actually, we have a little bit of the call right here. This is the CEO of Broadcom, Hock Tan.
Hard for me to pinpoint what 26 is going to look like precisely. So I rather not give you guys any guidance, and that's why we don't give you guidance, but we do give it for Q1.
That was Broadcom CEO there, Hock Tan.
Remember what I said about guidance?
Bloomberg Intelligence analyst Matt Bloxham joins us now for more. Matt, was it the number, the $73 billion, or was it the 6 quarters that it's going to take to roll this all out?
Yeah, I think it's a mixture thing, to be honest. I think it's definitely that, a bit of frustration that they're not willing to kind of give a clearer guide on the 2026. No, well, to be honest, I don't think that's so surprising. It's not something we'd typically expect a company to give at this point, particularly in such a kind of fast-moving market. And I think, the CEO there was trying to kind of give risk to the upside on that number, that $73 billion likely to grow, not shrink, but just not trying to kind of get a pin down on any particular number. And if you look at the Q1 guidance, actually, improving revenue momentum, a doubling of their AI revenue year on year, and a better than expectations. I think the other issue that perhaps, kind of was a bit soft and disappointing for analysts and investors was the gross margin guide for Q1. So signaling about 100 basis point squeeze on gross margins as the product mix shifts more towards AI. I think they flagged that before, but I think that's kind of added to the uncertainty that people are trying to work out in their models about, A, how much revenue is going to grow, and B, what's the impact going to be on profitability.
So there you have it. Even though they beat, remember, when you're looking at earnings, it's inherently backwards looking of how it played out in the last quarter, and the stock market is a forward-looking vehicle. So when your guidance isn't up to snub, and also you're just kind of not giving it on specific, very important numbers, well, the market doesn't necessarily tend to react the best way. On top of that, somewhat related to the world of AI, Trump signs executive order for Signal National AI Regulation Standard, limiting power of states. So this is something that is being met by a lot of criticism, I suppose is the best way to put it. So on the larger governmental level, yes, there's a bit of, I suppose, just regulations and saying it's going to be federal rather than state. So that might be something you want to look into, but just I figured I'd share it with you because of all the AI news. Moving on, if you haven't already, sign up for the newsletter, macros.locals.com. It's in the description of the video, and my mod will put it in chat. It comes to your email inbox every single Sunday. If this is your first time watching this show, sign up for it. It's free. You never had to pay for it. You never will. If you're watching this show and you still haven't signed up, what in the world are you doing? This is a freebie resource where I break down what's going on in the market. I let you know about all the major earnings, all the major macroeconomic events, and most useful, the seasonality of each individual day, where I need to let you know that the seasonality of today specifically over the past 27 years worth of information, it does clearly favor the Bears. Now, with that being said, they only win 43% of the time, as in the Bears have a 7% edge. So that doesn't mean it's like a foregone conclusion. It just means they have an edge on the day. Today does pay more in history to be a bear rather than a bull, and this is based on the opening value of the S&P 500 futures market based on all the way to the closing value of the S&P 500 futures market. So once again, is it the end all be all? No, but I'm just letting you know there is a bearish seasonality for this individual day. If you want to use that information, great. If you don't want to use it, whatever. I'm not your mom. I'm not in control of your money. I just want to let you know that the seasonality is bearish, and also to let you know, if you haven't signed up for the newsletter, sign up for the newsletter. And also, while you're signing up for stuff, sign up for the Payday Friday. Folks, I see that many of you are joining in right now. If you haven't already, don't forget to like, subscribe, and share this video with your grandma. Get her watching the show. Do whatever you need to. But today is a Payday Friday. We're giving away 10 prop accounts, 5 for futures on FFN, 5 for options on Vanquish, and then obviously we're going to be doing a blazing fast marbles race for $150 of cold hard cash, and it is free for all of you to enter. If you are watching on Rumble, if you are watching on YouTube, if you are watching on MySpace, it does not matter. You're all invited to participate. All you have to do is like, retweet, and follow this specific tweet. You could go to my Twitter page at Matt_Kohrs. So once again, just like, retweet, and follow, and you guys are all going to be in. And we'll probably do that around in about an hour. Let's just call it, I don't know, 10:30 roughly. It kind of depends on like what's going on in the market today. So like I said, all you have to do is like, retweet, and follow, and you're going to be throwing, your hat will be successfully in contention for either 1 of 5 futures accounts, 1 of 5 options accounts, or the marble race in itself, where the winner will be getting $150 of cold hard cash. And with that being said, we have about 2 minutes to go to the market open. So the last thing I need to share with all of you are the key levels of the day. If the market were to open at this moment, we would be at 6,900, pretty much the closing value from yesterday. The SPY pretty much there. The Qs are getting hit because of Broadcom. And let's throw up NVIDIA just because it has an impact. It is trending down a little bit. So actually, how is small cap looking right now? Probably pretty good. So small cap is up, SPY is flat, and the tech is down. That's pretty much the skinny on the situation as of this morning. So if we were to open up right now, we're pretty much right where my cursor is. The bear case, which I am actually leaning bullish, is first movement down to the top of the transition zone at 6885, and then from there you can watch 6850, which is the bottom of the transition zone, and then from there you can watch the break of the transition to yesterday's low, and there's a key gamma level at 6825 as well, a little bit of an overshoot. Now if you're feeling bullish today, you'd be looking for the break and hold of yesterday's high at 6903. Then from there you'd be looking for a push into the region of the all-time high at 6920. Once again, this is the record high. From there we do have a key gamma level at 6930, and then the most important gamma level of the day above is at 6950. So that would obviously be your bull case. In terms of these key levels, let me zoom in just so you can see it a little bit better. But right here, you can see there's a massive positive gamma node at 6,900. From there, there's a little bit of a push. Next gamma node is surprise, surprise at the all-time high. And then from there, you have a little bit of a seemingly a call debit spread, which is kind of an interesting play. It's about 5,000. So once again, this is a bullish play. This is kind of a conservative bullish play where they're long a lot of contracts at 6,950, but it's not like a naked long. They are protected by selling the 6,960. So I did want to call that out, that this is not a credit spread, it's a debit spread, which it really isn't that common, but for whatever reason, we are seeing more. What did I just do? Double click to zoom back out. Don't tell me what to do. How did I zoom in so much? What did I do? Mom! Wait, do I do this one? Oh, there we go. Anyway, sorry for panicking. Then if we don't hold 6,900 right here, 6,885, a little bit of a negative gamma zone. And then from there, we're talking about the zone from 6,860 to 6,850 as the next potential point to be paying attention to. So a little bit of positive gamma just beneath, which I would argue is a bit bullish. From there, negative gamma above, which I would very much argue is bullish. And then that kind of stops around 6,950. So if I was doing some degenerate 0DT stuff to the upside, I would be happy to take my profits at 6,950 to the upside today. And on that particular note, dingity ding ding ding, the world's largest casino is now open. Best of luck to all, play responsibly, and if not, have fun. All right. Do we have some, Mr. Producer, do we have some Christmas tunes to be popping by chance? Maybe we can be set in the mood back here. Mr. Producer, let me know. Send it to me in a DM if we have any Christmas tunes that we could be popping off. But speaking of that, speaking of that, I do need to put one thing as we are thick thoughts. My bias remains cautiously bullish. I don't want to be taking any massive swings. Buy some intraday dips. All right. Godspeed. All right, what do we have over here? The producer, man, he's a man on fire today. Velvet, a very Velvet Crispin, full album. Oh, dude, we're jamming out today. Folks, this is all on Tendies and Tunes. We give away this music for free. Just go to Tendies and Tunes on YouTube. A Velvet Christmas. This guy's just a modern day sex symbol. Is that a good volume? Maybe a little loud. Just something to jam out to in the background. You guys know how it be. You guys know how it be. All right, out of the gate. Oh, did I actually make the right move? I did, because I got knocked out here at 90. I would have had to be sweating all the way down to 30. So for once, variance didn't go against me, and I actually made the right move. Your boy didn't, unfortunately, bottom ticket. Granted, if I waited a second, I could have gotten 20 more points, which would have been $400 more. But regardless, I'm not going to focus on that. I'm going to be focusing on the fact that if I was a degenerate and I held it this whole time, that would have been some serious pain. I would have been underwater to the tune of 60 points. That's $1,200. So I would have been down 900, and right now I'd be screaming at the high heavens for it to come back. So let's mark that down. For once, I did something right in my life. That's exciting. Generally, your boy's not doing the right things. Oh, we forgot to talk about it. Okay. As the market is opening, I have a funny story to share with all of you, and it's funny because it's super sad, because it just means I'm like a degenerate gambler. But yesterday, for those of you who tuned into the show, first of all, thank you for tuning in. I appreciate that. But you know, when I left you, the accounts were down maybe 3,000 each, roughly, something like that. I don't know. Someone correct me in chat, but it was like maybe 3.5. Dude. So on the surface level, it looks like I did something smart. It looks like I somehow made a comeback and was able to make about $200 per account. This one random account made $50. I don't know what's going on there, but most of these accounts made about $200. So you're probably thinking, wow, Matt had a comeback of about $3,000, $3,500. Congrats to him. He got it to green on the day. And first of all, obviously the end result was green on the day. It was, folks. Wait, why am I? Okay, there I am. Folks, it was not like, oh man, I saw this opportunity and I ended up like just making it all back and climbing out. It was far more sad, far more degenerate, and far more arduous of a story than that. I got off stream and I started placing some trades, and basically, let me take you down memory lane of how yesterday actually played out. I'll just generically show you the 10-minute. So I was basically just trying to get on the right side of the trend. So stream ended around 11. And if you were there, I caught a little bit of this pump. I was doing stupid pre-market trading, and that ended me down a little bit. I caught a little bit of a short in here. I still tried to short, and it popped. So that was the first thing that lost me. So it started to go up, and I was like, oh, I'll play that trend. So I went long, and it dropped. So I lost on that. I tried to go short, and it started to pop again. And I was like, are you kidding me? And stream ended sometime in here. I tried to take this short right after stream, right here. No, it started going up. I was like, are you kidding me? I went long with really close risk. Guess what? It went down. No matter what I did, it felt as if just like the trend was always just switching on me. And it was insane. So when I left in here, I was long and I got blown out. So that was maybe down 3 when I left you on stream. Then when it started to pop here, and then in this action, I went down a realized loss of like 555. And then I was starting to go long in here at 11.50, maybe 12, somewhere in here. And at first it was going against me. I saw my unrealized drawdown at worst got around to like 8.5. I was down 8.5 on 15 accounts, which means I was down $130,000. And I was like, what the fuck are you doing? It's like you start to spiral. I was like, dude, you just gotta like keep your shit together. Don't spiral. Don't blow the accounts. And I remember at one point around 12:30, I told myself, I'm like, dude, if you see your accounts down 10K each, if you go down 150K, like, you just got to call it a day. Because other than that, you're going to spiral and it's going to get really, really bad. Like, you got to be in the mode of protection. So what I did, I was like, okay, I saw this breakout. So it went up, got rejected, went up, got rejected. On this one in here, around 12:15-ish, I was like, okay, it's breaking up. I'll try some longs. So I layered in one long, held it. We pulled back. We start to break out. I layer in another long. Great. We start to break out again. I layer in another long. And at one point, I am long about 5 contracts, and right around this top at 3, I was just able to get back out break even. So finally I was able to like calm down. I locked in, and that's where basically I had like minimal gains on the day. Oddly enough, if I continued to hold it, I would have really been green in a close, but I just didn't want to take on that risk because honestly, I was in that mode of when I had a realized loss of 5.5, unrealized got as deep as 8. When I saw a bit of green, I was like, yo, hit the exit button, move on with your life, because it was so stressful. I was talking with the Discord after it happened, like basically telling them that I'm just the dumbest person on this planet. And what's Tesla? Which way is Tesla going? Tesla's looking strong. I have a Tesla position actually. I think I was doing this tactic where I was layering in one contract at a time, and I would basically move the stop to break even as soon as I could and just try to get a lot of freebie trades. But when you do that, a lot of them get knocked out for break even because you're moving it so aggressively. And I think I ended up trading 38 times yesterday on every single account. I think I had 38 trades. Dude, I was literally just like, my eyes were glued to the 100 tick chart. I was just losing my mind. I was just, oh, dude, I think even though I ended up making money, I think I took years off my life. Like literally, I was just watching the 100 tick chart, trying to fucking turn lemons into lemonade. And dude, it was something. It was wild. So I'm happy I was able to save it, but I'm not so happy with whatever the fuck I was doing. I mean, I think variance was like getting me, but dude, it was not ideal. Tesla's nicely green, and then actually Nvidia is showing some movement. I have a Tesla position that's actually looking, if you're in the Discord, you know my Tesla position. I'm already up 52% on it and climbing. So that's looking nice. Wait, what other daily movements am I missing right now as we're chit-chatting about how you guys are watching the most degenerate trader in all of the lands? Vago, a little bit of a gap down, could become problematic below 370. Nvidia, a little bit of a higher low. I actually kind of like that. AMD, a little bit of a higher low. I kind of like that. Palantir, a higher low. I kind of like that. Apple, I'm still in Apple. I can't play another Apple play. I already have Apple. Meta, Oracle, RUM. Okay, where's Nvidia? This is actually one that I find to be the most interesting. Oh, I might do an Nvidia play. Hang on, Discord. Your boy's cooking right now. Your boy's cooking with a little bit of Nvidia. What do we want to do on old Nvidia? What do we want to do? What kind of play can your boy cook up on Nvidia? Oh brother, oh brother, oh brother, oh mother. Huh. How do I want to do this? How? I'm torn on how I want to handle this bad mamma jamma. All right. I'm throwing in a bullish play on NVIDIA, but I don't know if it's going to fill. It's pending. Yeah, we'll see if it fills. I'll let you know if it fills. But just catching my eye. I'm liking the structure I'm seeing over here on NVIDIA of the higher low pushing into the cloud. We'll see if it can kind of recapture that. It's not the best setup I've ever seen in the world, but I kind of like what's going on. I kind of like its overall vibe. Oh, I just got the fill. All right, if you're in the Discord, hang on. I'm taking a quick screenshot. A very quick screenshot. Just got the fill. By the way, if you guys want to join the Goonie Trading Discord, great group of people. Your first month is free. You're able to test drive it. I don't want anyone to feel like they got. Swingers. Here we go. NVIDIA. Okay, that's in the Discord if you're curious about what I just did. Oh, what was that dip there at 941? Is that dip worthwhile to be bought? What just happened? We haven't looked at flow yet today. This is what bit my ass yesterday. Was I was just fighting flow for no reason. I was kind of fighting a giant mismatch. Not to share the story about how stupid I am trading, but to take like an actual lesson away from it. I would argue that the major way I knew I shouldn't have been trading was there was a gigantic mismatch between the S&P 500 and the NASDAQ, which is kind of statistically odd because the companies that have the biggest impact on the NASDAQ have the biggest impact on the S&P 500 and vice versa. So if it's the same companies, why would they be moving so independently? So it tells you it's those little guys who are adding up to having complete opposite movement. And when I saw all that mismatch, I should have known. Honestly, I should have had the discipline to just not trade. I should have had the discipline to, I was telling you guys about it, like even on stream, go watch that show from yesterday. I was like, oh, that's weird. That's a big mismatch. What's going on? That's strange. And then yet I was still trading. So even though I had a good amount of control and discipline in my exits and my risk management, I felt as if I was showing very little discipline in my entries, I suppose. I feel like maybe I should have been a little bit more willing on the show and in my own trading with you guys yesterday just to not trade trades. And remember, hey, I've been trading for years. At this point, I've been trading over for a decade. I totally understand this concept of oh no, I'm here, I'm watching the charts, and there's this underlying feeling that you feel like you should be trading. And sometimes the opportunity is not just there. And in reviewing what I saw yesterday, I don't think I had really that good of reason to actually be placing trades. I think I had a good reason around 950 and then again past 1230, but I was trading in between 10 and 12 where things were completely mismatched, and that's just I wasn't seeing quality setups, and it's no surprise that I was just kind of getting completely chopped alive because the data we were receiving was just completely opposite. You had the SPY that was showing strength, the Mag 7 that was showing weakness, and surprise, surprise, it just kept going that way, and I just couldn't get on the right side. Now, of course, there's an argument for variance of oh, maybe you just get lucky. Maybe you're just on the right side of a 20, 30, 40, 50 point movement. You get your money and you move on with your life. That's totally possible, but it just so happens that I wasn't, and I just got absolutely murked. And then I think I had a little bit of skill, quite a bit of discipline to draw back, to get out of that, to fight the drawback. But in reality, there's also an aspect of luck, just that the market keeps moving that much for you to able to dig yourself out of said hole. So right now, talking about mismatches, 5 minute, try to go bullish, pushing bearish on both the S&P 500 and on the NASDAQ. If you're looking at the 10 minute, both are bearish right now. S&P 500 right here, NASDAQ right here. Looking at the 30 minute, the NASDAQ is clearly bearish, while the S&P 500 is questionable. So I'm going to be watching this like a hawk. Does the S&P 500 bounce, or do we actually break below 89 and start to go? Well, obviously both on the 4 hour. Actually, no, scratch that. I'm sorry, I misspoke. The 4 hour over here on the NASDAQ is actually pushing bearish. So this is the second day in a row where we're seeing kind of a mismatch, and this is the second day in the row where the NASDAQ is attempting to push lower. So I'm going to be watching that out of the gate. The Mag 7 actually got a nice pump, and then something happened right here at 941. Someone decided to sell a bunch of calls and buy a bunch of puts, and who was it on? Was it AMD? Yes, AMD. Someone bought puts and sold calls. Was it Apple? Yes, there was some call selling on Apple. Was it Avago? No, but Avago is trending down pretty much all day. Was it Microsoft? Yes, there was call selling on Microsoft. Was it MSTR? Yes, MSTR. Someone bought puts and sold calls. Was it Meta? No one touched puts, but someone did sell calls. Was it Netflix? No, Netflix is actually showing strength today. Was it Nvidia? Someone sold, or actually, sold some calls, but mostly bought puts. Was it Oracle? No, but Oracle's trending down all day. Was it Palantir? Yes, someone sold a grip of calls on Palantir. Was it Tesla? No, Tesla's showing like abnormal strength relative to everything going on right now. Tesla's actually showing the most strength, and Google is fine. I would say it's neutral. I would say it's the second strongest relative to the fact that we're selling off. But if you're looking for a bullish opportunity, folks, it's on the screen. This is evidently the bullish one. It got a flow alert back here at 934, and it fucking went Jeff Gordon mode and started ripping around the track while everything else is getting a little bit clapped right now. So there was a whole host of things that happened. It wasn't just one equity at 941, but yes, across many of the most popular tech names, there was call selling and put buying. That dropped it. It tried to recover. The recovery is basically exclusively Tesla, and from there, the other ones are continuing to bleed off. So I'm not seeing, this is a look at the S&P 500. It was pretty solid up until 940, and then same thing at 941, someone just bought puts and dumped calls. That is adding negative delta and removing positive delta, and the lower your delta is, that's a measure of how the market makers have to react. If your delta goes lower and lower and lower, that means the market makers have to go more and more short. As the delta rises and rises and rises, that means that the market makers have to go more and more long, and this is all a complex mathematical reaction to balancing out their books. But what you need to know is the TLDR is, as the line is going lower and trending lower, the market makers are forced to get more bearish. They're forced to get more short, or at least less bullish. And then obviously the opposite is true. As it goes up and up and up, the market makers, to hedge out their books, have to get more bullish. They have to buy more, or at least get, I suppose, less short. We just cracked the intraday low on Qs. I'm actually really happy I got out of my position. We just took out the overnight session low. Remember, I was long at 90, or I got knocked out at 90. I would almost be down by 75 points. Holy shit. This is, I feel like, the first time where I'm like, dude, I got knocked out and that was a good knockout. I feel like most of the time I'm here complaining to you guys. I'm like, I got knocked out and this is my life. Interesting. If you are playing this breakdown, the next level I see is 24,450, and then below that you can watch 25,400 flat. So you're looking at 400 flat and 450 on the NQ contract. There is an upside gap fill to 25,822. I know that seems crazy. I know that seems really far away, but folks, that is very much in the cards today. Upside gap fill, NQ 25,822, very much in the cards today. So just because out of the gate we're taking a little bit of a hit, yesterday is a perfect example. We also took a little bit of a hit out of the gate, and then guess what? We recovered like no other. Right here, Thursday, we took a hit, and then right around 10:02 is when we saw the orders start hitting the tape, and then we recovered all day. So just because you're seeing a bit of red here, look at this. Relative to what we saw yesterday, huge pump, gap down, push, and then we recovered all day. On a relative basis, this is actually kind of a small sell-off, and if anything, we're just seeing a sell-off to this top of the transition zone. Remember at the start of this stream when I would say this is your bearish target number one, we just hit it. It's just a key level. Wow, this is looking really choppy. But right here, we're basically just seeing this negative gamma node, a little bit of positive gamma right around it. So if we bounce in here, no one should be surprised from a market maker perspective. This is literally just the top of the transition zone, thought to be bullish above, bearish below, choppy within, and we're just at it right now. It's also the 10-minute 50 EMA. So I'd be watching this. I'd be watching 65. It's another key area if we continue to sell, and 50 is a key technical level, psychological level, and gamma level on top of all that. So we're just kind of now in that neutral zone. So I get it. If you're zoomed into the 1 minute, you're probably like, this is bearish. But remember, remember, when in doubt, zoom out, because sometimes the larger picture can definitely tell you a different story. And Tesla, for whatever reason, does not give a hoot. It is ripping. It is absolutely ripping right now. What am I looking at? Maybe a little bit of buying going on right now. Dude, I'm loving these tunes in the background. Mag 7 is starting to show some life. It really didn't dip that bad. I get that price is getting destroyed, but if you look at the Mag 7, it popped, and actually the people are buying this dip right now. Looking at the S&P 500, it did legitimately get smashed, and it's still showing that it's getting smashed. I'm kind of curious if we're going to see the same 10 a.m. reversal that we saw not only yesterday, but we've been seeing it a lot over the past couple months. Very friendly reminder. Today is a Payday Friday, as in we're doing a lot of giveaways. If you're watching this right now, if you're listening to me right now, you are invited to participate. All you have to do is like, retweet, and follow, and that is how you enter. We're giving away 5 FFN futures accounts. We're giving away 5 Vanquish options accounts, and then we're giving away $150 cold hard cash to the fastest marble racer in all the land. Like I said, all you have to do is like, retweet, and follow. The particular tweet I'm talking about is pinned to the top of chat in the description of the video, and my mod just put it in chat. Once again, it is free for all of you, so you might as well just do it, because you might win an account or a different type of account or $150 of cold hard cash. And one thing I wanted to point out to you, just that I thought it was cool, I kind of hope it's someone in here. I don't know. I just saw this morning. Is Sean F in here? Because Vanquish just got a new record singular payout of $38,000. Market volatility isn't stopping our traders. Sean F just secured a $38,000 payout on a 10K account. What? A singular $38,000 payout on a $10,000 account. He now holds the crown for the highest single payout ever processed. So once again, we're talking about singular payouts, but dude, a 10K account and getting a payout of 38K? Dude, is Sean F in here? Because if so, Sean F, like, who are you? What did you do? Like, share your secrets, man. Share your secret, Sean. But anyway, that's the options trading one, and Funded Futures Network also doing some pretty crazy payouts lately. Even though they're not involved in today's giveaway, I do want to let you know Apex is running a crazy 90% off deal. So basically, here's what you need to know. If you want to trade on Vanquish, use code Goonie. 50% off, buy one, get one, no activation fee. If you want to use Funded Futures Network, 50% off, buy one, get one, no activation fee, code Goonie. And Apex, which is not part of today's giveaway, I just can't not let you know about the fact that it's a 90% off deal. Guess what? Code Goonie. Code Goonie for all of them. It's going to work. Whichever one you like, great. Take advantage of it. But there's some pretty fat, nice Christmas, December deals going on right now. Are we seeing the 10 a.m. reversal? It looks like it's starting a little early today. Tesla is up and away. I might be hitting my Tesla profit today. Like I said, I was up 50%. Where's my Tesla position? 65% right now. It's getting there. I still have some more meat on the bone, if you will. More meat on the bone, but it's going, dude. So I have a put credit spread on Tesla, which is a bullish to neutral strategy, and it is paying. It is paying nicely. The Nvidia one that I just got today is slightly down. Apple is up. S&P 500 up. I have 4 live swing positions: Tesla, Apple, and Nvidia. 3 of them are up. Tesla, S&P 500, and Apple. They're all green. Tesla's up 62%. S&P 500's up 18%. Apple's up 37%. And Nvidia, the one I just put on today, is down 14%. But hey, I think it's going to work out. I'm not too worried about it. We're making some moves. Making some money moves over there. All right, I'm kind of waiting for 10 a.m. I honestly don't feel that much pressure to do anything nuts today because I already made money right here. I already locked in a couple shekels, a couple dinero, if you will. And part of me... Wait, did I get disconnected? I think my data got disconnected. What? What in tarnation? Hang on, I'm just reconnecting everything. My data got disconnected. I was going to say the market looks like a lot better than I thought it did. I'm waiting. Hey, I got disconnected. The yellow means it's trying to connect. Okay, I think I'm back. This chart doesn't look right because we're not trading at 55. We're trading at 57. Why is one of my charts right? This one, I'm now frozen, unfortunately. But anyway, what I was attempting to show you is I'm already green on the day. So I'm not necessarily like feeling that degen urge to like get something in. If I see a nice opportunity, I mean, honestly, this breakout trade right here, 45, risking 33, not a bad trade. We don't even have the 30-minute Orbo yet. These red lines, the red dash lines, are just the extremes of the day, as in our current regular trading session high and low. So the reason I marked that out is because I'm a fan of the 50% retracement. And look at that. We retraced right to 50. So if for some reason you were looking to buy the dip, that's a reasonable target area. Interesting. You could also watch something like this if you're feeling bullish. And then if you're bearish, you would kind of attach the intraday low to whatever that swing is and look for the break of that. But see how we popped right back up to the 50% retracement and got smoked? There's a lot of people who trade that 50% retracement area for good reason. It just happens to play out a lot, and it kind of trains your mind to not be chasey, I suppose. It trains your mind to not be chasey. I think it's reasonable to take this trade, this breakout of 56, risking 39, and then on the moment that we're touching 70 right here, you'd be long. On the moment you're touching 70, you move your stop to break even and you have a freebie trade. So right here, I didn't take the trade obviously, but I'm trying to explain the logic in real time. The second it hits 70, takes out this recent high, stop to break even, free trade. So right now, you could slowly follow it up. Generally, I just wait for the level to be taken out, which we're getting very close to. We just hit 68. So you can move it there, I suppose. I would kind of wait for 70. I would want to see it tick above whatever this high is. So I'd want to see 70.25, which it's about to hit. We almost hit it. I think, what did we just hit right there? We hit 70, so we tied it. So at this point, I'd move my stop to break even. Freebie play. You're in at 56. If it runs, congrats. Awesome. Great. You get to ride it all the way back up to 620. On the flip side, if it's not looking good for you, you get knocked out for break even, which... Yep, just knocked out for break even. So it's a freebie. It didn't hurt you, is my point. If you end up doing a bunch of freebie plays, even if 4 of them get knocked out for break even, you don't care because you're out for break even. And if that 5th play is the one that goes in your favor, awesome. And right here, you're protecting yourself because you don't know if it's just a double top rejection and we vomit and we come all the way back to 500. You don't want to take on that risk. And then if it starts to turn back around, guess what? You could always get back in because there's no pattern day trading when it comes to the world of futures trading, especially when you're talking about SIMDA funded. I believe I'm one of the few people who really, like, at least that streams and shows their account and that type of thing, who like is really trying to put this big of an emphasis on getting your stop to break even. In the world of futures trading, there's no pattern day trading. I know that there's some part of our brain that, because if you come from the world of option trading, you might have pattern day trading issues to like consider, and you're like, I can't just get out that easily. Well, in the world of futures, you can take as many trades as you want. So I really just want to put a strong emphasis on that, because that's the reason how I've been able to make $400,000 since late October. So basically in a month and a half, how have I made $400,000 cumulatively across 15 accounts? It's just with extreme risk management. Most of my trades, as in a majority, I'm saying over 50% of my trades are break-even trades. It happens. Psychologically, it's a little tough to get used to that at first, just because like it just so happens that the first time you do it, you get knocked out at break even, and then it rips in your way anyway, and then the second time and the third time, and it's going to seemingly happen to you a lot, where you're like, oh wait, if I just gave it a bit more risk, it would have gone in my way. And then eventually, the first time you decide to like give it a little bit more time, that's the time that the trend actually reverses and you take a big hit. It's how trading goes. Like, you just got to get used to it. But I deeply believe this is one of the best strategies to handle SIMDA funded trading. It's just absurd, paranoid, obsessive risk management. And then honestly, I would even take that to the next level and argue, if you started doing that across the board with your options trading, your crypto trading, the best traders I know, the people who do this like truly professionally for hedge funds, for large books, just for their own large account, that's the one common thing I see across the board. The one major common thing I see across the board It's not like they have a slew of massive big winners. What they have is just no massive losers ever. And sometimes they have big winners, sometimes they have small winners, sometimes it's medium winners, like whatever it is. But the one thing that is common across the board is they never suffer like singular large losses, because just statistically, it'd be super, super rare. If you're always taking small losses, it would take a lot of those to add up to one large loss. And obviously, the math of the situation is that it could happen. I'm not saying it won't, but just the math of the market and how it works, and the fact that, especially for day trading, it's effectively just random. It would take a lot of like unfortunate random hits for a bunch of small losses to add up to one large loss, because it just doesn't work that way. It's possible, but you would just be the most unlucky person ever. So maybe just bet on the fact that you're not the most unlucky person ever, and just get much better at your risk management. And I think one of the best ways to do that is, as soon as you're a little bit in the money, move that stop to break even and have at it. Maybe you caught a runner, maybe you didn't catch a runner. Got 37 mins of Christmas mariachi bouncing from the studio. Hell yeah, that's what we're all here for. Ew, math. That's how we all feel about it. All right, so right now, clearly, we've put in lower highs and lower lows on the SPY, and we put in lower highs and lower lows on the Qs. NVIDIA maybe double bottoming right here, and Tesla is still up, and away. Looking at the flow, the S&P 500 is getting its teeth kicked in, but maybe we're about to get that 10 a.m. reversal. The Mag 7 is actually looking decent. I know that the Qs are getting beat up right now, but I'm going to be that person to tell you that people are buying this dip. I don't know how aggressively I would want to be chasing this to the downside. Obviously, if you do, maybe, hey, I'll be the first to admit it. I've told you many, many times the market is basically 50-50. So if you're like, no, Matt, I see a breakdown, I'm moving my stop to break even, it's a freebie play, don't let me get in your way. But I'm just kind of, from a holistic standpoint, pointing out the fact that people are actually buying the Mag 7 into this dip right now. So what do we have on this? And there's gamma. We have positive gamma at 860 and 850. So it might be a dip to, but even that's some good room to still go. I don't even know, because the Mag 7 is holding. Yes, the SPY is looking crappy, but I see all this support. Looking at this, there's positive gamma here. If in the event we dip all the way to 50, I don't even know if we're going to hit that today. It is a put credit spread. That is a neutral to bullish thing. So they're basically saying, hey, we might dip all the way to here, but we're not going to close below it. That's what this structure is telling you. This is a bet to the tune of 10,000 contracts. That's a big play. It's a 98.6 percentile play. It is a put credit spread. It is a neutral to bullish bet, and if you're coming from the world of sports betting, it's equivalent to an over bet. So basically they're saying at 4 p.m. today, when the market closes, the S&P 500 will be above 6,850. That's what that bet is saying on the screen. They don't care if it's above it by a cent or by hundreds of points. They just want it above. Like I said, the most direct, I guess, corollary I could come up with is in sports betting, when you're betting on the over for like score or something like that, you don't care if it's above by a point or by a gazillion points, you just want it to be over. That's what this bet is right here, and it's a sizable bet. So what we have going on, and I did not come up with this, I did not notice this, this is not my research, but I did find it very interesting. The team at SpotGammon noticed that sometimes when you have plays like this, it's a quote-unquote seek and destroy, as in they've kind of noticed that with these large plays that they're kind of tested throughout the day, and then we reverse off of it. So in this situation, it would be a sell-off, we tag it, and we bounce. But sometimes you see it on the top side as well, and you could go up to it, and then that's the reversions, where you go up and you get rejected. So I'm curious if that's what's going to play out today. I'm wondering if this position, which is a key psychological level as well, and then obviously thus due to the position itself, it became a key gamma level. I wonder if it's that quote unquote seek and destroy, where they sell off to it, which is another 30 points. We're at 78. So that's 27 points from here. They might sell all the way down, tag it, and then bounce. That's totally possible. Can you re-explain how the lifetime PA and cost works after one were to pass the 50K eval with 90% off, please and thanks? I can try, but there's not much to it. When you pass the eval, You pay the lifetime fee, and that's it. You're done paying. As long as that particular account is alive, you have no more fees associated with it. Like, there's no monthly fee or anything. That's why it's called lifetime fee. So the current lifetime fee on Apex is $65. So after you pass the eval will cost you $19. When you pass the eval, to go from eval to performance, that activation fee is $65. You pay that one time, and that's it. As long as that account is alive, you will have no additional fee to pay. So I guess maybe to drive home this thing. So my new Apex accounts right here that I'm highlighting, I took the test yesterday, $19. I paid the upgrade fee this morning, which was $65. And now as long as I don't blow these accounts out, I never have to pay them again. That's it. I'm done paying as long as these accounts are alive. So we just broke that Orbo low. We just made, when I talk about the 30-minute Orbo, I'm talking about the 30-minute high and low. So basically from 9:30 to 10 a.m., you can see the SPY broke it and the Qs just broke it. Tesla's even giving some of its gains back. Tesla on the daily chart is looking good right now. So the fact that this thing is showing relative strength when the rest of the market is actually getting hit this morning, the SPY down 0.3, the Q's down 0.8, the Russell's down 0.3, Avago's down 9.5, Nvidia's down 0.6, AMD's down 1.8, Palantir's down 2.7. The fact that Tesla and Apple are showing relative strength tells me something abnormally strong is going on with them, because even in the face of the market getting hit for the SPY and the Qs and the Russell, which has no correlation, I'm just kind of pointing it out, Apple's green and Tesla's green. And Tesla's green to the tune of 2%. Something tells me that there's some like clear bullish aggression going on in old Tesla. I mean, look at that flow. As the S&P 500 is getting cooked, everyone's just, I guess, for some reason pivoting into Tesla today. As to why they're doing it, your guess is as good as mine, but they're clearly doing it. Matt, I trust that you are getting payouts. I don't understand the business model. I think that these companies would be losing way too much money for this work. Okay. I don't know what you want me to say to that. I don't know how you came to your conclusion. Like, what? Okay, Chuck. Like, is there a question in there? Like, I would think these companies are losing way too much money from this model. What do you want me to say to that? I don't know how you do your business analysis. I don't know how you come up with... I don't know how you came to that conclusion. So, I don't know. It sounds like more like a statement than anything else, so I don't know what I could possibly enlighten you on with that one. But if I had to like make some assumptions here, it sounds like you're assuming a lot of people get payouts. A lot of people do not get payouts. Most people do not know how to trade. Most people take the test and fail the test and move on with their life, because most people are not good traders. It's very, very rare. Like, I read a stat one time, and don't quote me on this, but I think it's less than 3% of people get a payout. Like, I don't know. I don't know what to tell you. It sounds like you're making an assumption that it's easy to get a payout, and it is not. So they're basically paying. It's like the model of a casino. A few people win, and they're paid off from all the people who lose, and it just turns out more people lose than who win. It's not some... You're talking as if this is some sort of like absurd business model to understand, and you just don't get it. It's actually rather simple. The business model is, hey, we think most retail traders suck at trading, so we'll charge them a fee, and if they can pass our test, we'll give them a bunch of capital, and they'll pay for that. And if they do really well, we'll pay them out. But we think most won't do well and will blow out, and we'll just keep their fees. Like, it's not... It's not a complicated thing. Where's the music coming from? What music? It might just be in your head, K-Hunt. It might just be in your noggin there, brother. If someone just got 10 grand, that's a lot of $19 fees and $65 fees. I don't get the business model either. You literally just explained it. Do you think that there's not a lot of people paying those fees? I mean, you literally just explained it. If someone gets paid out, there must be a lot of people not getting paid out who are paying the fees. Boom. Boom. You just nailed the business model. Yes, in fact, there are a lot of people. Folks, I myself have taken the eval. I'm not saying the performance, but I've taken the test thousands of times. Thousands. And I'm just one guy. There's maybe I'm a little bit more degenerate than your average Joe, but you're literally answering it right there. Prop firms have a 97% win rate, so they can take bigger risk. I don't know if it's exactly 97%, but I wouldn't be surprised if it's in that realm. 10K would be 140 losers. Yeah, I mean, when you can buy 20 accounts at once and you just JOLO them all, that's 20 right there. If you do that 2 or 3 times a day, that's 16. That's just one person. Like, it's not... by the time you actually, look into the math of it, I mean... I believe, what was the number? There was a lawsuit against Apex, and in the lawsuit, one of their monthly profits came out from sometime last year, and I think they were net ahead. So this is after doing all their payouts. I think Apex as a company was net ahead by $20 million or something like that. Do you have a discount code for Vanquish? Yeah, just Goonie. Goonie for everything will work. But this was last year, sometime in 2024, there was a person who left Apex, and then Apex sued him, or he sued them, and it was something internal about someone stealing software. But due to this lawsuit, obviously there's discovery and evidence came out, and I believe the 1 month, just because there was a particular month in question, and some people started to do a deep dive on this court hearing and blah, 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 blah. You get the point. But I think they were ahead after doing the payouts by about 20 mil that month. So I don't know if that was abnormally good, abnormally bad. I don't know if that's average, but let's take that as average. This company's net ahead by 250 million a month. And by the time you pay off your employees, I mean, that can't be that much. I mean, let's just call that. And I'm over guessing here, but let's say that's 50 mil. You're net ahead by 200 mil a year. It's funny because in here, some of you guys are not understanding. You're like, oh, wow, so many people are getting payouts. How are they possibly paying it? It's actually dramatically the other way. It's actually insanely the other way of how much money these companies are making. And that's exactly how when someone requests $1 million or $2 million, they're getting payouts right away because this company's just that flush. You are a great trader. I don't know about that. But there are days when I don't understand what happens. Where literally every trade goes against you. Do you mark these days and perform analysis on them? I try to, but I don't think there's days where literally every trade goes. I think you're using the word literally in a figurative sense. On my accounts right here, my quote unquote big accounts, these 15 accounts that have above 77, or this one's at 80, but all the way down to 77. I believe I started them on October 21st. So I've been trading for a month and a half, and I believe I've had 3 or 4 losing days. I've had a loss of $500, a loss of $800, a loss of $3,200. I'm talking about the realized loss at the end of the day. And there might have been one more. So I know there's 3 losing days for sure. $500, $800 per account. I'm not talking about cumulatively. Cumulatively, just multiply the number by 15. I've lost 500, 800, 3.2, and there might have been one more day in there. We're not understanding it because you're not explaining it right. You said you pay $19 and then $65 and you're done. Apex is telling me there's monthly fees. I am explaining it right. I don't know what you're not understanding. What do you mean Apex is telling you? It's right in front of your face. Lifetime PA fees. Lifetime. You pass the test. in one day, or you lose the test in one day. Upon passing the test, if you choose to upgrade it, it's a lifetime PA fee. Like, what do you mean? Are you just reading the FAQ and not considering their current offering? Like, it's literally on the homepage, like right in front of your face. I can explain it properly, but I can't necessarily understand it for you. That's just on you, dude. Like, maybe we have a difference in the definition of the word lifetime. I could show you my credit card bills, and I could show you that from October till now, those accounts that I have haven't been charged. I don't know if that would prove the point, but as much as I can explain it properly for you, I can't understand it for you. I think the confusion here is on the test. If you don't pass and don't cancel the account, you'll get charged again. But most people don't run into that because you're either passing or failing the test on the first day, which means you're upgrading it the next day, or you're canceling the account that day and buying another account. I believe the confusion is probably from the eval stage, where if you don't pass, yeah, technically, if you don't cancel the account within a month, you're going to get billed again. But most 99.99999% of traders don't deal with that because you're either passing or failing the test within a day or two. It's not taking you an entire month to figure it out. Like, most people either degen it and either get lucky or don't get lucky. So, like I said, 99.999% of traders don't have to deal with the eval going a full month. I believe that's where the confusion is most likely coming from. But that's just, I guess, a guess, because once again, as much as I can explain stuff properly to you all, I can't explain it. You don't have to explain it. The comments explained it for me. I mean, they're literally just reiterating what I already explained. Holy crap, if you guys can't read, please don't try to trade prop accounts. What I think the confusion is they're probably reading the FAQ and not realizing that there's a specialty deal. So they're not applying the rules of the specialty deal to what they're reading in the FAQ. If you're just reading the FAQ, you're probably confused. You probably think it takes 7 days to pass. You probably think a lot of things that are just inaccurate because you're not considering the current offering, the current deal. That's If I had to guess, I think that's where the mismatch in this is from. But so like Top Step, well, all of these guys have slightly different rules. So they're similar, but they're not the exact same. But Top Step has its own set of rules. Take Profit Trader, FFN, Tradeify, they're all similar, but there are some important differences. So for example, on Apex, you can pass in one day, but then when you're on an eval, you could pass the eval in one day, but when you're on a performance account, it takes 8 days to get a payout. On Take Profit Trader, it takes 5 days to pass the eval, but as soon as you're on a performance account, you can get paid out every single day. On FFN, you can pass the account, I believe, depending on the account you pick, you could either pass in 7 days or 4 days. There's two options. And then from there, you could get paid out as soon as you have the buffer. So like that's what I said is like, they all kind of like rhyme the same, but there are nuances of each one that obviously before you buy one, you should like kind of look into it. On Tradeify, you could buy an account that's already no eval stage. You just go straight to funded, and then you follow their 20% consistency. So you have to trade at least 5 days with the consistency rule. And then if you have enough money, you could do a request. So it just bounces back and forth. Day 2 of Matt's favorite firm being Top Step. No, I'm not a fan of Top Step because I think the CEO is a piece of shit, and I just don't like Project X. If Project X magically improves its tech, maybe, but from like, if you're trading there, one of the most frustrating things ever is trying to trade and then you have tech issues. And Project X, which is the back-end technology of Top Step, it breaks every other day. It breaks every other day. So, whatever. I could probably get over my distaste for the CEO. In fact, I would probably like taking money from him because I think he's an asshat. So I don't necessarily think that's a negative for me using the firm, because I would love to take the money from a person I don't like. But literally their tech package, it's unusable. So maybe if they get some good coders and they fix it, I might consider it. But they're like, it's horrible. Absolutely horrible. Matt, can you pop it back to all-time highs now? I got in at this dip. I kind of like that play. It's a little degen. You might be catching this double bottom. Ideally, on a pop or something, you can set your stop to break even, but you are technically fighting trend, 5 minute, 10 minute, 30 minute, all bearish. So something to consider. 5 minute, 10 minute, 30 minute, all bearish. And actually now the 4 hours breaking down. Like I said on NQ, your first target was 450. Your next target is 400 flat. We almost got there, got to 410, and past that I'd be watching 383. We're right at the 50% point of the transition zone between 885 and 850, right at this key gamma level of 65. If we start to bounce off of that, I think that could be a bit interesting. But if I were attempting to catch a falling knife, I'd rather try to catch the falling knife off of 850 rather than 65, just because it is this giant put credit spread. And as I alluded to before, that whole like seek and destroy thing. So if I'm buying a dip, like if we're just diving and I'm randomly trying to throw a dart at the board that sticks, I would prefer to do it off of 50 rather than 65. So I'm kind of just watching this over here. And then obviously if you're playing this breakdown, that would be a reasonable place for you to target as well. So we just hit 400. We're not at the initial balance yet. So 400, this was my second target, and my reach target is 383. So as we were talking about before, 450, 400, 383. And honestly, if SPX goes all the way down to 850, we'll probably overshoot 383. I'm just watching this technical low from Wednesday. But if we keep going there, you could watch 330. That's another 50 points. But obviously, we are battling it out, but a clear trend to the downside. Clear trend to the downside right now. We're getting what's your Apex code? My code for everything is just Goonie. So Apex Goonie, Vanquish Goonie, FFN Goonie. They're all running slightly different deals. They're all good deals. And one thing that I just want to drive home to all of you guys is, remember, as much as all these firms are like, yeah, we're your friend, we're trying to partner with good traders and blah, 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 they're not your friend. They're as much of your friend as a casino is your friend. You should have no loyalty to a random casino. You should have no loyalty to a random sim prop firm. You're trying to take their money. They're trying to take your money. Please understand the relationship. I get it. I get the marketing of like, no, we're best buddies and we just happen to be best buddies that you give me money all the time. That's the one thing that I really dislike about this industry is they're all trying to cosplay as your best friend. They're not your best friend. Understand the relationship. You're trying to take their money. They're trying to take your money, and may the best man win. May the best woman win. May the best robot win. So because of that, understand the relationship and don't just arbitrarily have loyalty. You give your money to the firms where you think you have the best opportunity. That's it. That's where the conversation starts. That's where the conversation stops. There's no if, ands, or buts. There's no point for loyalty because trust me, as much as you want to take their money and you don't give a fuck if they blow out as a business, they're more than happy to take your money and they don't give a fuck if you go bankrupt individually. There's no love lost in this relationship. Like, please understand, it is as cold as that. You want their money, they want your money, that's it. Easy peasy lemon squeezies. Like, you don't need to overcomplicate that. So, here we go. That was a reasonable short that I was kind of thinking about taking, but I didn't because I was scared. Oh, I probably should have taken that. What time is it? 10:24. Maybe I'll get lucky. If there's another bounce back up to 2025, I might try to short that. I do kind of want to look at options flow. In the back of my mind, I'm almost wondering if I could ride NQ all the way down as SPX hits 50 here. And then maybe from that point, getting hit. I mean, ES is, we are getting smoked right now. We took out yesterday's low. We took out that 83 level that I was talking about. Next one is 320, 325, something like that, 330. Another 50 points from here. I wouldn't mind hopping. Well, hang on. We might be getting to that target level pretty soon here. Like I said, 50 is what I'm watching. Obviously, if it doesn't hold, I'd be looking at 33 to 25, somewhere in this region. But I wouldn't expect a clean break on the first attempt. It's just too much of a gamma level. Of course, anything can happen. I'm making no guarantees. But if I had to give odds, I would give odds to at least on the first attempt, some form of a bounce rather than a clean break. So if we get to this level, just be careful of an initial reversion. Now, it could be a dead cat bounce, or it could be the start of a V-shaped reversal. That will be told. But the chance of us just slicing through 50 without like some sort of attempted bounce, I would perceive to be very, very low, simply because it's way too large of a gamma level. We have this very, very evident put credit spread. It's a 99 percentile play. It's actually getting bigger since we've been tracking it. It's increased. When I first showed you this put credit spread, it was 10,000. It's now up to 12.2. So it went from a 98.5 percentile play to a 99 percentile. So what does that mean? It means in the past 30 days, 99% of plays have been smaller than this one. So only 1% of plays have been bigger than this particular play, which is why I'm so closely watching it, because I'm expecting a market reaction right at this level. And maybe we could play off of that. Maybe. With respect to flow, Mag 7 is bleeding. It was looking strong. Now it's bleeding. S&P 500 has just been bleeding all day. Obviously, we are watching this put credit spread, which is a neutral to bullish bet. It's an over bet. They think the market will close above 6,850. And what we're seemingly witnessing right now is a seek and destroy, where the market seemingly has a proclivity to tagging these big levels. Someone said Tesla's getting smoked. Kind of. I mean, it's still green on the day when everything else is red, and Apple's also still green. I could understand that if you chased it at 62, you feel silly, but also why would you be chasing it at 62? Your first attempt to buy it was probably here at 58, but it didn't show signs of bouncing. Chasing, not... I find that a lot of the times I end up having a stupid trade. If I end up really looking at like where did it go wrong, it's because I wasn't patient with the entry and I just chased it and I thought it was going. I mean, not too long ago, old Matt would have been chasing this breakdown. I would have gotten a fill at 80 when in reality I should have been in here at 412. So maybe if it keeps going, I would have looked smart. But in reality, if you want to go short, wait for that pullback. It's okay to wait. It's okay to wait. You could have shorted this right here at 72, risking 85. Do I like it? Not particularly, but guess what? Your stop's already at break even and it's a freebie play. So if we vomit at that 330, 320 level, you got that free play. But the point is you're not chasing on the short. You're waiting for the pullback that fails. Because what does that do? It minimizes your risk because it gives you a different point to anchor it off of. While if you were chasing over here at 80 on this like drop, you're either using 403 or you're using 424. You're just literally taking on larger risk. So you could wait for the pump that fails. And obviously, I'm just on this particular time frame. Like you could use whatever time frame you care about. If you care about the 1 minute, the last pullback was all the way here at 10:01. I guess you could argue it was a bit of a pullback here at 10:15, or you could have taken this breakdown. But really, the name of the game is as simple as just find reasonable points to anchor off of and then have the discipline to stick to it. All right, we just hit that second level I was talking about at 330. This was that low from, so this is a potential bounce point right here. It is the low from when? From overnight on Tuesday. If this doesn't hold, then we're talking about 212, 210. So we're at this low right here. We're at a swing low, literally this level right here. So there might be buyers here, and past this, I'd be watching the lower 200s if we keep going. But as I could show you, I would be expecting some buyers to step in somewhere in this area. And oddly enough, I am proven wrong because I am not seeing any sitting buy orders. This is turning into a free fall situation. There's some people are stepping in at 305. Can you see this, or is my big head blocking it? Sorry, they were here at 305 for a second, coming back at 300, 305. So we'll see if these buyers have anything to say. It's not the big, oh, never mind. They just got fucking sliced. They got sliced up like that ninja fruit game. They got sliced up. There were some buyers. Look at this. It just from 1020. It's just getting goosed, brother. They're just getting goosed. So we're right at 300. Not long ago, we were talking about the short at 400. How crazy is that? There's not as many buyers stepping in as here as you necessarily want. Do we hit that 50 level? I feel like that's becoming important. Yeah, free fall. Okay, so we are here. Like I said, this is what I'm watching. I would not be chasing short here just because there's a very real chance that we bounce off of these bars. Of course, it could break, but we're already at the spot gamma implied one-day move low. I was willing to chase it a little bit earlier today. Once again, if you can find reasonable risk, but just to blindly be going short right here, there's just too high of a chance, like a very real chance we just bounce off of this level. So obviously, if you decide to chase it long or short right here, hey, Godspeed. But for me, if there were random prices on the chart today that I'm like, no, I should probably just wait and see how this plays out, this would be one of those levels. It would very much be one of those levels. Just be like, all I can tell you is the market makers very much care about this. They have a lot of book risk at these levels. So all of a sudden, you now have natural buyers stepping into the market that were not there before, i.e. the market makers. And you could just see we're kind of getting caught up in this positive gamma. So if I were playing this, I would just be patient and wait. Yes, on a recovery, if you're trying to catch that falling knife, it's not the most insane thing to go long here at 50 and risk 43. That's a very reasonable risk reward, because if you are wrong, you're losing 7 points. If you're right, you could ride it all the way back up to 85, potentially even 900. So you only have to be right, quote unquote, once in a while for you to pay off all of your losses. So from a risk reward perspective, that's actually a good long right here. And by the time it takes out 59, I'd actually move my stop to break even. That's how I would play it. Obviously, I'm not playing it, but on this little recovery right here, you slap on the long, 59 is your trigger to go stop to break even, and your risk at max is 43, and you just see how it plays out. And then by the time you take out 59, ideally your stop's at break even, and then from there, hopefully you could just ride it all the way back up all day if this is a recovery day. And if you happen to be wrong, one of two cases. You're either taking a small loss or you're out for break even. But it's rather a simple setup. It's just, remember, the game is risk reward. It's not about accurately predicting the next move, because you have no idea what the next move is going to be, and there's no way to accurately predict it. Your best accuracy is going to maybe only be as high as 60%, as in 40% of the time you're still going to be wrong of predicting the quote unquote next move. So if you're sitting there trying to find that strategy that, oh my God, I'm right 85% of the time, you're not going to find it. And if you do find it, it just means you're going for little profits with large risk. That's the only way to get accuracy that high. There's no way to have an accuracy of 80, 90, 95% where you have equal size wins and losses. The math of trading is not like that. The only time you have wins of 80, 85, 90% is when you go for small profits and you're willing to accept large losses. Those are the only times you're going to be seeing hit rates that high. Other than that, if your wins and your losses are roughly the same size, your hit rate's going to be anywhere from 40 to 60%. Like that's just the math of trading, especially day trading. Is Matt wearing his plaid shirt, brown, cordially bell bottom ensemble for the 70s today? Why not, brother? Why not? What is the indicator for the arrows for high lows and higher highs? Fractals. Williams fractals. It's a free indicator. This little caret here, the low, the high, the low. It's called Williams fractals, and it's free on TradingView. Just search fractals with an F. Fractals with an F. Hey, Matt, do you think the rate choice Japan is making next week will have a big impact? No clue. Once again, don't care about predicting. I care about reacting. You don't make money in this game from predicting. You really just don't. You make money from reacting to price developments and using good risk management. It does not matter. I honestly, a lot of the time, think I would be a better trader by never taking in news at any point in time, because I think whether consciously or subconsciously, I hear the news and I develop a bias from it. And I think sometimes I try to apply that bias to where I think price should go. But at the end of the day, it does not matter. Just doesn't. Simply does not. This idea of trying to anticipate who's going to beat or miss on earnings, what will the market do with the monetary policy announcement, this, that, you're gonna be right 50-50. It doesn't fucking matter. And there's too many people attempting to try to predict, and then yet most people lose money trading, and then they question why. It's, well, you're doing the wrong thing. You're practicing the wrong sport. You're honing the wrong skill. You do not get paid in the market from predicting things properly, because there's too many examples of the prediction coming true, but then the market going in the complete opposite way, or the prediction being wrong, but then the market going in the same way that you thought it would anyway. That shows you that there's really no correlation between accurate predictions and price movement. BTC tanking. Blew out my account. Payday Friday time yet. Hey, it's almost there, Chief. I'm sorry you blew out. If you use Supertrend, Williams Fractals, and Bollinger Bands, that a free group setup, as long as they're all firing same signal. This is a potential high or low. Off of what? 330. So on the 500, how deep is this? That's a little bit too much risk for me. I was thinking about taking this long, and I could on micros, but I feel like trading a mini. I was going to go long at 51, but my risk was 21. That's 30 points. That's $600. So if I was wrong, I'd be going in the whole $300. I don't necessarily like it, but if you took that trade at 52, obviously on the breakout of 74, you'd be moving your stop to break even, and you could target 400, maybe even 425, and then maybe reach goal of 450. But this is a potential high or low. This might be the, what was this? So we overshot the initial balance. So right here, the initial balance is the high and the low of the regular trading hours from 9:30 to 10:30. So we just made that, we overshot it, and look at that. We had a bounce from 315 all the way up to 7. That's a 60-point bounce off the initial balance. That's crazy. That's absolutely crazy. Matt, you prefer the 50K account or like the 100K or 150? Is there a reason as drawdown seems better on the 150K? The only two accounts that I think are worthwhile are the 50K and the 150K, and it's just because of the ratios. I use the 50K, but just to be completely honest, all those people with record payouts, they do seem to use the 150K, but I'm just personally biased to the 50K. But if you want more of a detail on that, I have an entire video that breaks that down. It's on Rumble. It's on YouTube. It's on the YouTube backup channel at Matt Kohrs. But if you go to videos, where was it? I think it's literally called the best accounts. Where is it? Yeah, right here. The best Apex account, the best Apex trader account size, 2025 tips and guides. So if you want to know the math of how to figure out what is the best account for you, I'd recommend watching that video. And obviously it is free. But that's on the backup channel. So you're right now on the Matt Kohrs show. If you just go to at Matt Kohrs, you can see a denied, approved, denied, how I made $200,000 in a month. And I just do answering Apex questions, their worst rule, explaining it. I explain Vanquish. I give some trading strategies. A lot of great freebie information in here that, once again, you don't have to pay for. It's just free. It's out there. But to directly answer your question, I only consider the 50 and the 150K account. That's how most traders do it. The big payout guys use 150. I'm biased to the 50K, and maybe that bias is right or wrong. Fuck. Oh, brother. How's the trend looking? Like I said, the dip buy off of 50. Don't say I didn't warn you, folks. I kind of called it out perfectly, and I gave you the reasoning. We talked about it when SPX was here at 880. No one has an excuse to be missing out on that trade. We talked about it at 880, the bounce off of 50. I explained the seek and destroy. I explained literally the entry as it happened at 1031. Rewind the tape. I said, you're long at 50. You're risking 43. You take out 59. Stop is to break even. Your stop should be to break even. It's now a freebie trade. You're either going to have a phenomenal day and ride the full recovery, or you're having a normal day and you're out for break even. So at this point, you're taking on no risk. You have a free lotto ticket. It's only upside. I explained it in real time. Literally no one has an excuse on that one. No one has an excuse on that one. Now, to be clear, I'm not saying it's gonna bounce. Maybe it does. It's just more of, really, I view trading to be a bunch of questions time and time again of, can I take advantage of this for potentially free? How many lottery tickets? It's just really a game of, can you play lotto scratchers for free over and over and over again? And you don't care if a lot of them are nothing, because every once in a while you get that, like, the winner, and cool, awesome, you move on with your life. Like, that's the name of the game. So with this one, once again, to be clear, I don't know if you're going to get paid. All I know is it bounced enough that your stop's at break even. Cool. Dope. You did what you have to do as a trader. Your stop's at break even. You potentially get to ride it, or you get knocked out at break even, but it's no sweat off your back. It is no hit to your account. I'm getting an alert on Tesla. Oh, we just made a new intraday low. All right, I'll move it back to 440 on that one. Wow, look at that wick up. That's not good. That's a big wick to the upside. This feels like it's not our music. Oh, it is. B-sides, unreleased songs and remixes. Dude, tennies and tunes popping. Do you use a 50K on Vanquish as well? I certainly do. Here's my 50K on Vanquish. I haven't done any trades yet today, but yeah, I have a 50K over on Vanquish for my options trading. I'm kind of watching this NQ structure to see if we're seeing a switch here or if we're still going to be puking. It doesn't seem like necessarily the easiest play. Well, in hindsight, me getting knocked out right before market open for a profit was a godsend, because I would be hundreds of points underwater. What lotto tickets does anyone know that can nearly always make enough from a Big Mac with a chance to scale into winning the occasional Texas Roadhouse steak dinner? That is a phenomenal question. That's the question we all need to be considering. Little bit. So I'm watching this IB low here at 15. What's the flow look like? The flow is still pretty bad, but maybe bottoming out on the Mag 7. And surprise, surprise, ever since that IB, ever since we hit 50, the S&P 500 is starting to recover. So coming back to this, maybe it bounces, maybe it doesn't, but you're seeing a little bit of life. Now, it could be a dead cat, obviously, and that's why you have risk management. That is why you have risk management. Oh, I really don't want to risk. Ideally, I'd love to keep my risk below 10 points. I just don't know if based on today's vol and movement, if that's possible. I just don't know. I was thinking about taking this trade at 60, risking... that's 25 points though. It's just like we're just moving too much. Like we're having the ATR is just too large. A little bit of a trend line breakout here on NQ. Right off of that 50. Let's see if this breakout's real or not. Dude, he slop. Salop. Shalop. Breakout at 80. Point of controls at 60. A lot of sellers up here at 95. Buyers down at 65. But we are climbing. Looks like it's breaking out a bit. Looks like we might be starting a recovery. So once again, if you played this, it's a freebie play. If anything, you could actually even move it up to in the money now at 54, and you're in at 50. So not the biggest gain ever, but at least you guaranteed yourself green, and then maybe ride the 65 up to 85. Like, that's what trading is, folks. Yep. Look at this. Just tagged 50, recovery, called it out before. Now we're watching for this reaction. If the market pushes above that, guess what? You could pay attention to 75 followed by 85, with 85 being the next key level. Basically, we're going from the top of the transition zone to the bottom of the transition zone, potentially back up to that top, but obviously watch that 50% retracement, which is 67. And just seeing from the structure of the day, some people seemingly are interested in 75. So I want to call that out. Went long at 25,350. Oh. Not only would you have your stop at break even, but you should put that in the money now. You can move it up to 60. Guarantee yourself 10 points. That's so easy. You caught the breakout. That's a good trade. Put your stop to 60 because it would have to break this EMA cloud, which is still all possible. But in the worst case scenario, you're making money. Like, that's the perfect trade. Maybe not the perfect trade, but I would define a very good trade to be a trade that in the worst case situation, you still make money. And to be able to get yourself into that position, it's just, did you manage your risk properly? Stopped out for 300 on that rip. Great. Great. Great, great, great. A little bit of a dagger there to 67. You have that stop at 60. That's not the worst breakout trade. 80, 67. I stapled my last paycheck to a candle wick. Watch it melt down faster than my nervous tick. Every chart's a Rorschach test. I fail, but I keep we're really zoomed in here, but I've been noticing on my entries lately, first of all, some discipline issues and some like chasey issues. So I'm trying to put some extra rules on myself. Fuck. I feel like I'm maybe a little too gun shy today. I should have taken this breakout at 80. I could have easily been in at 80, risking 67, 13 points, stop to break even. And I'm just looking for that breakout of 400. Granted, it might get tapped here and I might get that opportunity, but we'll see. I feel like I'm catching myself second guessing all these entries today, even though, dude, there's a lot of buyers at 355, like a huge amount of buyers down here. Point of control, the POC is 360. 400 contracts are attempted to be purchased down here at 355. Wow. Wow, that's a chunk of NQ contracts. We're running into this issue at 65, which is part of the reason why I was saying I was gun shy, because I'm basically going long at a key level saying, no, I'm confident it's going to break out, when maybe that's not the best logic because you have a 50-50. That's what you mark out key levels just to know, okay, I got to pay attention, but it's not like you have an increased amount of odds. Key levels are just key levels. You're still flipping a coin. It's just more of, you might not necessarily care about the levels in between. But we'll see. We'll see. I guess part of it, maybe I'm not gun shy. Maybe I'm actually just being smart because I already made money today. I'm already up. I'm up 300. I'm up 150. That is the higher low. What's the flow looking like now? So Mag 7 is flat. It was selling off. Now it's gone completely flat, but it's picking up. S&P 500 did pick up kind of going flat now. Oh. I'm trying to watch to see if I could catch an early move on anything here. It's just the name of the game is, can you do it with minimal risk? Potential little break. All right, we swept that low. So anyone who's chasing this to the upside, the fact that it swept it, you should be considering the fact that we punctured that. And also, as I showed you, look at all these buyers at 55. That's going to be a natural target. We're literally filling them right now. Filled. Huge fill. It filled all of them. That was 400 fucking contracts. Holy shit. 400. Look at that. 544 contracts got filled right there. Oh, dude. For NQ, think about it. You trade one contract and you're like, dude, this is moving. That was 544 contracts. Volume, 544. Holy cow. Holy cow. That's some size, man. Oh, jeez. That was me. Sean, congrats, man. You got your fill. 544 contracts. Sean swinging some size today. Sean's like, I did that. Wow. So much size. 68. That's not too bad. Was it actually traded or was it withdrawn? I literally just showed you that 544 contracts were traded. What do you mean withdrawn? It can't be traded and also withdrawn.
With a chaos soul.
POC is 60.
Chaos soul.
60. 67. Oh, I'm looking at the flow, which is starting to get a bit hit here. What I'm groaning about is right here. SPX started to get hit. Mag 7 started to get hit.
Order filled. Order submitted.
Free play. Don't give a shit. That's how it's done, folks. Sometimes you take on a little bit of risk, and like I said, I'm attempting to practice what I preach. Sometimes it goes in your way. You move your stop to break even. Easy peasy lemon squeezies. I was looking for that sweep low to move my stop to break even. We took it out. Stop is now at break even. And I'll happily take my profits at 301 just in case buyers step in at 300, but it looks like I'm now being protected at 331. But I'm targeting these guys down here. That's why I have my order right there. And it's a free play. Either I'm making money or I'm not. Like, the worst case, and like I cannot stress this enough. The worst case scenario is I'm back where I was. Best case scenario is I make money. That's it. That's it. There's too many people who you get in and then it starts to come back to you. And like, I'm not chastising anyone because I do this as well. It comes back and like, oh, I'm going to give it a little bit more room. It's like this idea that like we're so stuck to like every time we trade, we want to make money. And just understand that sometimes you're not going to make money. In fact, maybe if this bounces, maybe I just close it. I am kind of awkwardly watching these guys at 30. I'm wondering how they're going to get, but I actually might move it into money. Yeah, we just broke that. Fuck it. Look at this. Guaranteeing myself 12 points. That's $240. So no matter what, I'm making $500 today. So I'm either going up to 500 or I'm going up even more. I don't know. Maybe it bounces and I get knocked out. Boo-hoo, I made $500. Maybe it falls and whatever. I make, I don't know, whatever that money is. Like, that's the point, is I care far more about the risk than I do the profit. If the profit hits, awesome, sick. You had a great day. And like, those are very, very exciting, obviously. But to survive this game, it's this. And it looks like actually that's about to get tagged.
Order
All right,
filled.
like I said, boo-hoo.
Order
$500 per account. Done. Because you know why I got out there? Because the flip side is it goes up and I get knocked out for break even. And even that case, like, I have to be honest, like, that's not that bad. Because if you give it more leeway, you might be giving it room to actually collapse. And it looks like if I did, it looks like this is about to collapse now anyway. And of course, I could re-enter there at 26 and I could risk 36. I risk 200 of that. Basically, I risk what I just locked in. And like I said, I was willing to secure some money. If I gave it a bit more room to work, I could have done that. That's another avenue, but I don't know. I wanted to lock in some, I don't know. And that actually, what just happened is kind of actually it's literally about to hit my target. Right, boom, I would have hit it. So if I used the stop at break even, that would have been fine. Or if I re-entered, that would have been fine. But to drive home what I'm trying to say here, had I used this, if you're using multiple contracts, what you could do is leave one at break even and then lock in some. So you're guaranteeing yourself some money and then you leave the runner for the runner. As you saw, I only had on one contract, so I couldn't do that. But had I had on multiple, I would have left one at break even. I would have taken one off here, and then the other one, I would have already been up a whole nother 100 points. Boom, another 100 points. So there is some advantages to trading multiple contracts because you can manage your profits and your risk a little bit better. I was obviously trading one. And for me personally, when you're only trading one, you should manage that one contract in the most risk-adverse manner possible. It's when you have the multiple contracts that you could be a little bit more whatever with. So does that suck that I got knocked out? Yeah, dude, it's a bummer. I don't know what you want me to say, but once again, I'm in this for the long, like, dude, if I'm growing my accounts at $500 per day, I have nothing to complain about. Like, it just is what it is. It's true for PAs and yes, kind of with eval, but you still have to fake trailing drawdown, but you are correct. And thanks for all the info. Well, there is the trailing drawdown, I guess, issue, but if you're trading well, you're not going to take that drawdown anyway. And just to be clear, in an effort to battle it, I'm trading half size on the fresh ones. Up here, these bigger guys where I made 500 right here, these ones are all 250 because I'm not trading a mini on those. I'm trading 5 micros. So in an effort to help with the variance of trading in itself, that's exactly what I'm doing. I'm trading half size to fight it a little bit. But Yeah, do I wish I held? Fuck yeah, I wish I held. But that's also, that's that woulda, coulda, shoulda mindset, where another word for that is just the hindsight bias. It is hindsight bias. Seeing how it played out right now, you would say, Matt, do you wish you held that? Of course I did, because it's more money. But then I could zoom out, and if we're playing hindsight bias, I fucking wish I went short at like market open at 6 p.m. last night, 7 p.m. last night, and just held it all the way. So like, dude, if you're playing the woulda, coulda, shoulda game, you're going to be there endlessly. Like, you really are. So if you find that you're getting stuck in that, ask yourself, like, okay, like, what's actually legitimately reasonable? Like, what is in your power to control? Because as much as we wish we had this clairvoyant ability, actually, that's a legit short right here. You could short 65, and that's baby risk at 77. Not necessarily my favorite, because I feel like it's going to retest IB. I would rather this structure occur up here, but still, that's a legit entry. Yeah, that's very much a legit entry. It's such small risk that if it plummets, it's just this game of risk reward. But if this structure, this pop right into the EMA cloud, if that happened above 300, I would actually really, really like that. So it looks like it's going to work out anyway, or it seemed as if it was going to work out. But had this structure, we pop up to this, start to fail. If that happened right here at the IB low, oh, dude, I would have loved that trade. But anyway, I feel like I've been droning on, and even though we're giving away good trading tips and showing some live trading where I was able to lock in a nice 7.5K, a nice winning day for me, we haven't done a Payday Friday giveaway. So I'm going to give you guys a couple extra minutes here. But once again, Payday Friday giveaway, pinned to the top of chat in the description of the video. All you have to do is like this tweet, retweet this tweet, and follow my account. Like, retweet, and follow. $150 of cold hard cash to the fastest marble racer. We're giving away 5 futures accounts from FFN. Right now, they're running a pretty sick deal, 50% off, buy one, get one, no activation fee with the code Goonie. So we're giving away 5 of those. And we're also giving away 5 Vanquish accounts, sim to funded option trading, where right here, same thing, code Goonie. You're going to be getting 50% off. You're going to get a free reset and no activation fee as well. And then even though it's not part of the giveaway, Apex, like 90% off. How could I not tell you about that? So, hey, take advantage of all of those. And then, like I said, fastest marble racer in all the land, we are doing $150 of cold hard cash. All you have to do is what these other 179 people have already figured out. Just like, retweet, and follow. I'm going to give you a couple extra minutes as I get the Twitter picker ready to go. Twitter picker, the X picker. Okay, cool. Let me get ready over here. Let me get prepped up. I'm stalling out so you guys have extra time. We're gonna do you know what we're gonna do? We're gonna do all 10 in one, and every other one. So basically, the first person's getting the FFN account. The second person's getting a Vanquish account. The third person is getting an FFN account. The fourth person is getting a Vanquish account. I think it's just easier for me to pick all 10 at once. So every other one starting with FFN. First one's FFN. So basically all the odd numbers are getting the FFN. All the even numbers are going to be getting a Vanquish account is how we're going to do it. Just so y'all know. But the market is breaking down literally as we speak. So I guess that trade that I was talking about would have worked out perfectly. Got close to getting knocked there. You had another entry here at 60 and you're already up 50 points. That's crazy. This thing is moving, grooving today. Moving, grooving today. All right, so we did all that. And you know what? I'm going to stall out even more. I'll get the game loaded. I'm just trying to give you guys more time to like, retweet, and follow. I'm stalling as hard as I can, folks. I'm stalling. I'm doing every other thing I could possibly do. Every other thing I could possibly do. You know, we'll even get the music pending. We're going to get everything ready. We're going to get everything ready. We're getting everything ready. I'm stalling. I'm trying to be your friend today. I know some days we're all adversaries, but not today. Today, I'm in a good mood. It's a Payday Friday. I'm trying to be your friend. Get started. Wait, no, I don't want that. All right, cool. All right, did you guys do it? Can I get a thumbs up? Did everyone who enter actually enter, or do I need to awkwardly stall a little bit? Can I get another thumbs up that you guys did get into this Payday Friday giveaway? Can I run it? Yes, no, maybe so, or does someone need an awkward additional 30 seconds? Does anyone need an additional awkward 30 seconds? Yes, no, maybe so. All right, I guess speak now or forever hold your peace, because we are going to be rocking it. We're going to be rocking it in 5, 4, 3, 2, 1. All right, we're picking. Remember, every other one, FFN to vanquish. Let me take this screenshot. Like I said, all right, we got these winners. Here are all the winners. Congrats to you. I'm just quickly screenshotting it and saving it for myself. Congrats to Mixalock, Bruh Stevens, Zappazap, Jenks, Tej Blaze, Lake Lurker, the F Guy, whatever that name is, Dave, and Profit Surfer. You are our 10 competitors for the day. And I do successfully have that screenshot. So you know what we're going to do? We're going to minimize this. We're going to save this page. I will be reaching out to all of you after stream today, just so you guys know. But in the meantime, let's get this going. Add names. All right. So we have Mix a Lot. We have Bruh Stevens. We have Zap Zap. We have Janks. We have Tej. We have Lake Lurker, that F guy, some name, I don't even know what this name is. Suj. We have Dave Spears, and then we have Profit Surfer. All right, those are our 10 competitors. 10 competitors. All right, we're going to do random. We are racing on the space station today. We are racing on the space station. All right, as we always do, before we let these racers really rip it, who are you guys voting on? If you guys had to bet, and if you're in here, you're obviously a betting person. Who do you think is going to win? If you had to put all the marbles on one of these marble racers, who's speaking to you? Who's like just deep in your soul resonating? Where are you guys at? Who do you think has been training? Who do you think's on steroids? Who's been taking a fresh D-ball? Who's on that trend? Who's been paying off the judge? I'm all in for Profit Surfer. Early, okay, bruh. Lake Lurker. So Mix has some votes. Okay, bruh's getting a lot of votes on this one. Interesting. All right, well, beings were already 30 minutes overdue. I don't want to keep you guys waiting for too long. So we are off to the races in 3, 2, 1. A little bit of DJ Piper, Payday Friday, and we have a big twisty turvy that we're going through. And it looks like Zap Zap is leading the way. Wow, everyone's ripping it down. Imagine how seasick they're getting. Imagine how motion sick they're getting, I should say. Zap Zap seems to be getting the first drop. Let's go into the structure. Uh-oh. You can't do that. Yeah, you can. My bad. Who's going to get the first drop? It might be Profit. Might be F Guy. It looks like Profit's going to... Mix got the first drop. Followed by Tej. So Mix, Tej, and Bruh. Everyone voting on Bruh. Uh-oh. Tej took an early lead, followed by Zap Zap. Tej did catch the speed up, but Zap Zap is in hot pursuit. Mix and Bruh and Suzuzug is also there. Tej catching the next speed up, and so did Zap Zap. Zap Zap, even though in second, not giving up. He's got that dog in him. And to round out the podium spots, we also have Mix. Tej getting through the first obstacle like nothing while Zap Zap got caught up. Tej ripping through this racetrack like it is his job. Obviously putting in that practice. Tej literally catching every speed up and dodging every obstacle thus far. What a competitor, folks. This might be a runaway race. Zap Zap is in a distant second. Wow, I don't know if we've seen this dominant of a performance. Tej, will he be able to keep it going? Zap Zap, and then Profit is rounding out third, passing Mix. But Tej, once again, not missing. This guy's gone 10 for 10, hitting it like Stefan from a deep three, not missing nothing. Will he be able to dodge this next obstacle? The first real mistake from Tej. Will Zap Zap use this to his advantage? Profit ripping into second. Tej is, Tej not able to recover. Profit making up some room. Tej, Profit. This is anyone's. Who has that heart? Who has that heart? Another obstacle. All right. All of a sudden, Profit into the lead. Tej making the smart move to dodge everything as Profit got caught up. Tej recapturing that gold place position. Tej not letting that misstep fuck with him. Zap Zap's all the way back there. Profit leading. But we have apparently a laser death valley coming up with Tej. Dude, he dodges all those fuck ups like I dodge alimony payments. Let's go. Tej dancing through these lasers. Dancing through them. He doesn't care about the heat in the kitchen because he is moving and grooving. What a performance. Oh, no one even had a shot. Mix is dead. Profit is dead. Bruh is dead. But folks, what? That was Kobe in his prime, folks. That was Kobe in his prime right there. Like, it was just dominant from the start. Oh, congratulations. Well, that F guy is still trying to... Hey, I appreciate that. Almost died from the laser. Showizzer is also trying to finish. I can appreciate that. That F guy is literally just stopped. He might get lasered to death. Nope. Oh, who's going to get fourth? Honorable mentions. Tej. Congrats to you, man. Dude, a performance. What a freaking performance he had right there. That's crazy. Like I said, I think that deserves a round of applause without a doubt. That's heart. That's effort. That's hours of practice. That's dedication. That's missing holidays, desserts, your daughter's quinceañera. That's putting in effort nonstop. That was quite the performance. We haven't seen that level of domination. Probably ever since we watched that Kim K video, I would say. But that was something. But I do appreciate everyone who participated. Obviously, round of applause for all the racers. Round of applause for everyone who tried to, it takes heart. It takes courage for anyone to compete. So the fact that so many people even willing to put their, I guess really their ego on the line, you all deserve a round of applause. But what doesn't deserve a round of applause today is the bull camp. The bull camp clearly does not deserve a round of applause because this market is just getting hit. But I'll have you know that we're really honestly just below the low value from yesterday, so it's not that dramatic. So as much as you look around in chat or mainstream media, everyone's going to be talking about a gigantic market sell-off. We're literally at the levels that we saw yesterday or maybe the day before, so let's not be overly dramatic with it. Before I let you go, the one thing I wanted to just call out, obviously shout out to Funded Futures Network, Vanquish, Apex, use that code Cooney on all of them. But the one thing I just wanted to let you guys know is we put up a cool video of my number one stock pick for next year. So if you want to watch it, that video is my top stock pick for 2026. That's in there. Feel free to check it out. It's on Rumble. It's on YouTube. But I just want to let you know that's probably a good watch over the weekend because it is, in fact, Friday, TGIF. I appreciate all the good vibes. But for those of you who are maybe thinking more about a swing portfolio or long-term investment portfolio, you might want to watch that video. Shout out to everyone who participated. Thank you for all the good vibes today. Thank you for all the good vibes this week. that's kind of all I have for you today. So whatever you choose to get up to this weekend, I hope you crush it. I hope you have a great time. Get some rest and relaxation. Unless that's not your cup of tea, then I guess maybe get your party time on or whatever you want to do. So as always, thank you for having such a great week, for having such a great day, for having such a great show. Whatever you do, I hope you make a buttload of money today. I hope you have a great weekend, and then I'll catch you once again on Sunday when we have an update video, and then Monday morning where once again we are streaming. Thank you, thank you, thank you. I'll catch you guys later. Peace.